Good morning, Richard Calhoun, real estate broker here in Silicon Valley for the past 40 years, working with buyers and sellers. We're here to talk about week number 11 in Silicon Valley real estate. Here we're looking at supply and demand. There's three lines because there's two supply lines. The first supply line is the blue line down here, total available inventory. And you can see that we're below 80% of the inventory you'd expect. And this is for macro data, which is San Mateo County, Santa Clara County, single family homes, condos, and townhouses all put together in a blender. Then we have the gray line, which is another supply line. That's the number of new listings in a given week. And you can see that we went up. We're at 120% of the new inventory coming on the marketplace. The big takeaway on that is we've been above on new inventory coming on the marketplace, been above the yellow line, which is the 5-year median. 5 years are 2015 through 2019. So the number of sellers coming on the marketplace are absolutely normal. They're slightly above normal. The inventory is low because the red line is the demand side, and the demand side has been above the normal 5-year median level of demand by about 15% for the ever since COVID restrictions were somewhat lifted basically May 1st of 2020. It's an overabundance of demand that's causing the shortage in inventory and causing the crazy marketplace we're in. Now we're looking at raw count. We're looking at days of unsold inventory. That's the ratio between supply and demand. How long would it take to sell the existing inventory if there were no new listings coming on the marketplace? The yellow line in this case is the actual raw count instead of a percentage. So you can see that at the beginning part of the year, DUI normally decreases fairly rapidly. That's an improving and accelerating marketplace. You can see the 5-year median is somewhere up around 22 days. The 5 years, 15 through 19, were all strong years. When we're now stronger than the strong 5 years, that's pretty significant. And basically, we're here in record low territories. You can see we're beating out anytime in 2021, and 2021 pretty much beat out any time previous. 2022 is proving to be a stronger market. I guess stronger is not the right word, a faster marketplace than even 2021 was. This is flipping over and looking at sort of what the buyers are feeling. This is your sale price to list price distribution for each week. The dotted lines are the oldest data points, the dashed lines are the next oldest, and then the solid lines are the most recent weeks. The blue dotted line down here is the worst month ever, and that is monthly data where everything else is weekly data. December of 2001, shortly after the World Trade Center explosions or plane crashes, the market was at its worst. And by the worst, it was the slowest. Buyers felt they had the upper hand. They were able to go in and offer below asking price. Back then, something like 20% of the sellers got below their asking price, from basically 20% down to somewhere around 7% got their asking price, and only 7% of the sellers got more than their asking price. Now we come out here to the purple line, and something like 91% of the sellers are getting more than their asking price. So the most current line is the solid purple line. It's also the broadest line to make it stick out. You can see it's at the top of the marketplace. It dips down a little bit here, but it's pretty consistently at the top. And you can see all the recent solid lines are all up here. The dotted red line through here is the previous best month we had, which was April of 2018. There's going to be 8 weeks of solid lines, and there's 2 solid lines down here. So the last 6 weeks have all outperformed April of 2018, which was the previous best record month we had as far as overbidding. Overbidding is a good indication because it's how much pressure the buyers are sensing out there trying to make that 30-year commitment to sign up for a mortgage and buy a house. This is the same information, just with less data points. Now we only have 12 weeks. Again, the most recent solid lines are up at the top here, and you can see them. All 4 of the most recent weeks and 2 of the dashed weeks are all grouped very close together. So those were the 6 weeks that were outperforming April of 2018. You got 2 solid weeks that were down here, which were basically 2021 data, along with 4 dotted weeks. 6 weeks that would be closings of offers that were accepted in 2022 are all outperforming our best month ever. The transactions that were negotiated back in 2021 were good and approaching our previous best record, but we're not there yet. They were below the April 2018 level. This is a little key indicator of the different components. Starting over on the left with inventory, the only thing with active listings, the only thing you know about is the raw count of inventory. I would consider 95 to 115% to be a a normal marketplace. Below 95 is going to be a red hot marketplace, and above 115 is going to be an ice cold buyer's marketplace. I have this week's data followed by last week's data. So in Santa Clara County, last week you're basically at 60%. This week you're at 61%. I don't think a 1% shift with the amount of fluctuation in real estate from week to week and the small sample size, I don't think that's significant at all. You go down to San Mateo County single family homes and you went from 81% to 84%. Again, I don't really think even a 3% increase is that significant. You might start saying the trend on all four indicators is up. And that is true. You know, single condos and townhouses in Santa Clara County went from 98% to 118%. Your San Mateo County, or at least the base cities, things on the base side of the ridge top, not including the north things. So basically south of Daly City, north of the Santa Clara County border, base side of the ridge line, that went from 229% of normal, or 2.25 times normal, to 2.5 times normal. So each number in by itself isn't that significant, but the fact that all four went in the same direction does start to be indicator a little bit potentially that there's a shift, but that's just on inventory. So that could be a extra increased number of sellers coming on the marketplace saying these prices are outrageous. You know, we're going to take our money and we're going to flee Silicon Valley. We're going to retire. That would indicate that going forward, I should start seeing that new number of listings coming on the marketplace each week go above the 5-year normal. So I'm keeping an eye on that. But now if we go over to offers, with offers, we can get an idea of what the rate of the speed of the marketplace is. We don't get sale price, so we don't know overbidding yet, but we know the speed of the marketplace. And basically here, there's really been no change. Santa Clara County went from 15.4 days to 15.6 days, a slowing, but 15.6 days is insanely fast. A 0.2 of an increase in the day DUI is not significant. Historically, what I'm looking for is about a 1 day, 5 days out of a 7-day week. That's when the market shifts. So the market has not shifted as of yet. The data point that is not available that I would really like to have is the number of unsuccessful bids each week. So how many buyers were trying to buy a house that weren't successful? That would be real interesting data and really useful data, but it's just simply not available. Then you go down to San Mateo County, it went from 17.4 days to 16.4. Again, about a 1.5, maybe even a 2-day increase, but in a 7-day period of time, 2 days does not bother me. The Santa Clara County condos have actually improved by a half a day. Again, really no shift. And the Bay Cities communities actually improved by a day and a half. Now we flip down to closings. With closings, we get more information. So we can look at the sale price, we can look at the frequency and the magnitude of overbidding. And so we'll start off with the frequency of overbidding. How common is it? 91.5% of the sellers are getting more than their asking price for single family homes in Santa Clara County. 89% of your single family homes in San Mateo County are getting more than their asking price. Condos are not far behind it, 87% essentially, and 86% for Santa Clara County and the Bay Cities respectively. Really no change from last week, but this data is basically lags by about 5 weeks for the length of escrows to close. Magnitude of overbidding. This is not how often buyers are overbidding, but how much the buyers are willing to overbid. And this is the average overbidding. And I did average intentionally because the median is going to be pegged at 100% fairly frequently. And you wouldn't see any change. And you could be at 100% about ready to drop down to 99%, or you could be at 100% ready to jump up to 101%. And you wouldn't know the market shifted at all. By using the median, or by using the average, it's going to overstate the median. You get distorted by if someone comes in and really overbids, but that doesn't happen very often. And it's overall a better indicator. I've started tracking the median, so I will soon have average and median, but I haven't decided how I'm going to start using that data, if I will use it. Basically, the buyers are feeling the same pressure from a week ago, 117.6 to 117.9. 116.6 to 116.7. So essentially flat on the single family homes. The condos have actually improved by a percentage in 1 percentage point in Santa Clara County, and by basically 4.5 percentage points in the Bay Cities. I have said this before, I'll go back to inventory. I have to go back and research this 200%, two times the double of the inventory in San Mateo County. I just don't expect it, and data here isn't consistent with it. But if you flip ahead and stay at the bottom here, the pricing is actually consistent. You've only had 5% appreciation, which is good, but it's clearly lagging the other areas. And we're essentially talking 2 years of appreciation now, or at least approaching 2 years, because my base year is the entire 2020 calendar year, and peak pricing typically happens around May. So we're getting pretty close to May of 2022, which would be 2 years past of May of 2020, which is when the base was probably established. It depends on what you do. Do you use peak pricing? Do you use the median number of escrows? Because that wasn't until August. You simply simplify it and use the middle date, July 1st. And I thought about it. Why am I having this problem when most people aren't having this problem? And the discrepancy here is I'm using a whole calendar year as my base year, and I'm comparing it to the last 5 weeks. And most everybody uses the same benchmark. I didn't want to do that because then your benchmark changes as well as your reading. So I basically sunk an anchor in the ground, and then I'm referencing back to that anchor. And I don't want to use a current moving year, because then I would be comparing a year over year. I'd be comparing a whole calendar year to a whole calendar year, because that would be such lagging data. So that's why it's not clean, and why I don't say this is annual appreciation, but it's approaching 2 years. Someone else might say July is the right time frame, and then you're only approaching a year and 3/4. So, that's what the data is. I'm using it to show the market's gone insane. I mean, we've had a 33% overall ballpark appreciation in something like 2 years. And that's pretty insane when you think about it. And then you go down to the Bay condos, and they're only at 5% appreciation. Then peak pricing was the peak during 2021. So, and that's a very typical thing. And you can see and this is when it got reported close. So the peak was probably about 5 weeks before this. So probably right at the end of May. That's when single family homes reached their highest price in 2021. And then they came back down, which is very common. And it's a combination of price overshoot and the type of properties they're selling later in the year. And then we've gone up from the 24.5. And just to give you some ideas, I think it went down to about 16.5%. So you went up to 24.5, down to 16.5%, and now you're back up to 37.5%. So if someone was buying right at the peak last year, which would have been closings on June 29, in the last year, you've made basically 13%, 12.5% appreciation. And that's a slight overstatement, because that appreciation is based on the 2020 pricing percent value to get the percentage. So if you bought in May of 2021, your price would have been higher. It would have been 24% higher. So now you have to take, I guess, 20% off of the delta. So 20% off the 13% delta would be somewhere around 11%, 10.5%. So you've had 10.5% appreciation since May of last year. And the bulk of that happened right at the step of the beginning and part of the year. In my opinion, it's hard to know what that number is, but it's pretty significant. Again, the key here is you're up 37.2% from the entire calendar year of 2020. Now we'll do a quick recap of my URLs. The green is what I call my root URL. If you type in just the green URL shown here, you get to the archive that are on YouTube. If you add in 2022, you get to the live presentation Saturday morning at 9 a.m. If you add in the letter H, 2022, then 0319 for the month and day, you'll get the handout, and that's these PowerPoints. My target time is to get it up about 15 minutes before I go live, so 8:45 Saturday morning. I made it by 55 seconds this morning. And if you want a specific old episode, you use the root URL and the 8-digit year, month, date code. If anyone's got a question, now the time to ask. Otherwise, I'll move forward. Not seeing any questions, I'll move forward. Here is the breakdown into micro market areas. We're looking at, actually, I consider the first 3 to be the key components, and I put in sold price because that's what everybody wants to know about. Days of unsold inventory is important because it's the leading indicator. It tells you when the number of offers decreases, and if the number of offers decreases, that's going to tend to indicate increase supply, it's increase slowing of the marketplace, it's the supply demand ratio, which indicates future prices. But basically at these numbers, these are the lowest numbers we basically have. You can't get much lower than that because most sellers want their home exposed on the marketplace for a week. Sort of 7 days is sort of the bottom of where you expect a lot of listings to sell. Yes, maybe you can do it in 5 days or 6 days, but they also, people are doing it in 8 or 9 days. It depends more on when your listing goes on the marketplace and when you look at the listings, that the offers that do come in. So to have a couple areas, the moderate priced areas, which are Campbell, Cambrian, Willow Glen, Santa Clara, to sell out everything essentially in 11 days if no new listings came on the market, it's pretty incredible. And that number would actually be less if sellers would look at offers right away. And I'm not implying that it's in the seller's best interest to look at offers right away because they want to expose the marketplace. That would be my professional advice to any of my clients. You want to expose the property. You know, it's hard to get below 7, and then there's some properties that for whatever reason want a 2-week exposure. Maybe they have limited times during the week where they can show the home because of family obligations or something along those lines. And so they're on the market for 14 days and your typical number up here is 11. It'd be interesting to see what percentage of the marketplace has been on the market for more than 30 days. And it's a number I don't have. It wouldn't be easy to get. And I'm not sure how telling it would be. It would correlate to this, but right now the number of listings, the percent of listings that are on the market for more than 30 days is going to be a pretty small number. So you can pick the single family area in Santa Clara County or the single family area in San Mateo County. And then at the bottom, you have condos and townhouses. I do not have San Mateo County as a whole. And I do that because, you know, there's a few properties over in the coastline, but the bulk of the properties are in these two areas. And just to combine the two doesn't make a whole lot of sense. And there's a significant difference. You can see the Bay Cities is sitting there at 17 days. And if I get my meeting notice out of the way, and yet the North condos is sitting basically at 50 days. So they don't follow each other very closely. So grouping the two really doesn't do anything other than mixes up the data. Then once you get the sold price, you can look at the amount of overbidding that the buyers are doing. And this first one is the frequency of overbidding. You can't get above 100%. You can't get 105% of the sellers getting more than their asking price. But right now, 91% of the sellers are getting their asking price. You got the strong areas here and the moderate low areas and the moderate area and even Cupertino, Sunnyvale. This is what's pulling up the average. But in Santa Clara County, the lowest area that I'm picking up real quick is South County at 82%. You know, and that marketplace down there, they're going to think their market's absolutely on fire, but they're the slowest area in Santa Clara County. And then if you go up to San Mateo County, countywide, it's down here and it has my initials in there because I do not include the entire county. I intentionally leave out very remote areas like La Honda, Pascadera, just because when those listings do sell, it does influence the data and there's such a small percentage of what the consumers are looking for. I just ignore it and look at the rest of the county. So the county, my county for San Mateo County is at 89%. You can see they've got some areas at 92%. Their lowest area is the expensive areas, Atherton, Menlo Park, Hillsborough, Portola Valley at 72%, followed by the coast at 80%. The bays are right up there. Redwood City at 97.6% of the sellers getting more than their asking price. That's getting real close to 100%. And if a seller got exactly their asking price, I don't count it. It has to be at least 100% above the asking price. It's got to be some dollar amount above. If someone's asking $2 million and you offer them $2 million, that's what's keeping Redwood City from hitting 100%. 97.6 is quite impressive. Then you have the condos and townhouses down at the bottom, come up to magnitude of overbidding. This is how much do the buyers feel they have to overbid. And you can see in Santa Clara County, you got a lot of areas right around 120%. And this is the average overbidding. There are people that pay as much as 50, 60% overbidding. There's rare cases where someone's done pricing at $999,000 because they think that's the right thing to do, and it sells for 2.5 times the asking price. And then you come down to San Mateo County, clearly, not as hot, but right up there, high teens, 112%, 119, 116, 118, very strong overbidding. Countywide, 116.7. It is somewhat noteworthy that typically San Mateo County, or historically San Mateo County, outperforms Santa Clara County. That has not been the case basically since COVID started. And again, it's not the case this week. The frequency of overbidding is 89% and Santa Clara outperforms at 91.5. The magnitude of overbidding is 116.7%. Again, Santa Clara County outdoes it at 117.9. Nothing wrong with either of those numbers. They're both insanely high, but it is interesting, the role reversals. And then the overbidding in condos. And, this is what's interesting is even though Bay Cities has only had 5% appreciation, you only have 17 days of inventory. You have 86% of the sellers getting more than their asking price, and they're getting 9% more than their asking price, but yet prices are flat. And then here is pricing. Most people follow the median only, which is the middle number. That's what assigns the color. When it's county data, I do it in thousands, and individual micro market areas are in million. The color is assigned by the middle number. So this color in South County is assigned by 1.3. In East San Jose, Central San Jose, and South San Jose, it's based on the 1.23. The bluer the color, the lower the price. The redder the color, the higher the price. So basically, you can look real quick. These colors are the same colors that are on the map. That's where I pull the colors from. And then in the condos, I start with the median being white, and I go blue as I go down lower in price. I do have a little bit of a issue that I'll try to fix, and what happened is the affordable areas of Santa Clara County used to be tied and a little bit below the San Mateo County, North counties. And so I elected to use the Santa Clara County affordable areas as my base, as the lowest. It's clearly no longer the case because 680,000 for the North San Mateo County condos is lower than the 824 Santa Clara County affordable areas. So I need to change my base to this, and that would make all these blues, except for the blue for San Mateo County North, to be a little bit lighter shade of blue. But the data is all accurate. It's just the shading of the blues not 100% correct. And that is something that will take a little time to change over. This now looks at the number of new listings, raw count each week compared to the 5-year median. So the 5-year median is the yellow line. So you can see we've been above a little bit, and this week we went up quite a bit. So that's part of the reason we have, the inventory going up is we had more sellers come on the marketplace than we normally do. You'd only expect 540, 530 new sellers, and yet we had something like 650. So we had more inventory come on the market this week. That may be the first kink in slowing down this crazy, insane marketplace. We had more sellers that will give us more supply for at least a couple weeks. I expect the buyers that have been frustrated and not been able to buy, they're going to buy that extra inventory. So it's going to take a couple weeks, but the first key would be to watch what happens to this new inventory. Is the new inventory coming on the market every week continuing to increase, or does it come back to the 5-year median? There's a lot of things that influence it for 1 week. I'm not sure what would normally influence it in March. A little later in the March, we have Martin Luther King's holiday, which impacts some people, but not a whole lot. It's a variable. And one of the things you can see just by how much the data fluctuates, this data, the 1 week data, or even the 5-year median, like look at this sawtooth, and that's 5 years. So there's a lot of weekly fluctuations. So in 1 week, you can put on your hat, you can look for other indicators, but right now, yeah, it's sort of noteworthy that you had this huge increase in new listings coming on the marketplace. What's going to happen next week? Got to stay tuned to find out. Now you look at the total inventory. You can see total inventory went up a little bit this week at a time frame when it's normally flat, but we're so far below the median. The yellow line would be the 5-year median. That would be up somewhere approaching 1,500, call it 1,475 maybe, and the number down here is maybe 1,100. So you're close to 400 short. You're close to a third short, and I forgot what the ratios of inventory were. Maybe it was 80%, but we're clearly short on inventory. This is the number of new offers coming in. Now, this is a significant drop down, but it's this week that had the increase in inventory. If this goes shooting up next week and inventory comes down, the market's going to keep on going. If the number of new offers next week continues to go down and the new inventory on the previous slide continues to go up, at some point in the fairly near future, the brakes would be coming onto the marketplace. It's not there yet, but these are the leading indicators that are there. Days of unsold inventory. This is the single biggest indicator, and this is the one that shows up market changes. And so it uses a 5-week average. So a 1-week change isn't really going to happen. But basically, what you start seeing, historically, you see about a 5-day increase every week, a 1-day per day increase almost in your days of unsold inventory. And basically, all three components are flat. Nothing has changed in the marketplace yet. It may in the near future, it may not. Only time will tell. Here's the breakdown of the DUI. The redder the color, the hotter the marketplace is. So real quickly, it goes saturated red at 7 days. Nothing is down at 7 days currently. 11 days is sort of the fastest marketplace. So we go from a fairly deep red up here in the San Mateo Bay City areas, all the way to a very faint white color here in Atherton and Palo Alto, Menlo Park. The reason I called it a faint white color is it's almost going pink. If it was 42 and a half days, I would start adding a little bit of pink into it. But at 44, there's no pink at all. It's pure white. Any shading that you see is just the underlying map color. Here's the frequency of overbid. You can see last year we spent a lot of the year with 80% of the sellers, 80% of the sellers getting more than they're overbidding. This year we're spending 85 to 95%. It's hard to get to 100%. So even though this is only 10 percentage points, 15 percentage points above last year, it's a hard 10, 15% to actually accomplish, and yet we did accomplish it. This is the frequency of overbidding over time. Look how steep those charts go off up at the right-hand side here, the most recent data. So all of them are going up. You might even be able to argue a little bit if you wanted to that Santa Clara County is rolling over and going flat. Very possible. You come back here last year, it rolled over and went flat, but this is 2 years ago. This is because of the COVID. Last year at this time would be back around here, and it was simply climbing. But you get up to this data point, which is hard for me to do a vertical straight line, which looks like closer to the beginning of April, is when the market flattened out. The market does flatten out and then tends to come down a little bit. It's performing like a normal marketplace in a lot of ways. Here's your overbid distribution chart. The higher the number, the more insane the marketplace is. Here's Campbell, Cambrian, Santa Clara, Willow Glen. Almost 97% of the sellers are getting more than their asking price. Some sellers would be getting their asking price. So the number of sellers are getting below their asking price is less than 3%. This is the overbidding magnitude over time. You can see last year we spent a lot of time at 108%. Towards the end of the year, we got up to 110%. Then this year, the transactions that were negotiated in 2021 and closing in the first 5 weeks of 2022 were that 110%. When you got into all 2022 transactions, boom, it jumped up to 115, 116%. And you can see the sawtooth, but again, the sawtooth is fairly common. I would have expected more consistency, but it really has never been there. I don't understand why buyers overbid more 1 week than the other, but it's the individual listings that are coming on the market, the individual buyers, and it's just the way life is. In the grand scheme of things, is there any difference between 108 and 110%? Not really. Is there a difference between 114 and 116? Not really, but there is a difference between 108, 110, and 114 and 116. So, you can watch market trends and try to pick up the difference between bounce and shifts. This would have been a shift right here, and that's because you're going from 2021 to 2022 transactions, basically and then you get a little bit more solid into 2022. So from this data point, week 7 on, 7, 8, 9, I got 10 and 11 in there somewhere. It's more statistical fluctuation, more statistical bounce. And that's why I think one of the reasons I got into this whole analysis was the real estate industry typically uses months. And I went to weeks because there's a strong weekly cycle. And with low interest rates, the weekly cycle far out influences the monthly cycle. And the monthly cycle has issues with the number of recordable days and things like that. By using the same number of Mondays, five Mondays, 5 Sundays, 5 Wednesdays, 5 of every day of the week, you eliminate a lot of that weekly cycle. So I was trying to make the data more stable. And then with COVID, I went into weekly data, and then my stability would just go out the window because there's nothing to make it more stable. Again, look at the overbidding magnitude here. Basically, you get over the first of the year, and these numbers just started to shoot up. Santa Clara County is a little bit interesting. Basically, since the end of September, It started climbing slowly, then a little bit more steeply, and then even a little bit more steeply. No indication that any of these are rolling off. Yes, San Mateo dipped down, but notice there's dips all the time. So I think that's just a dip, but there's no clear rollover and turn down in the magnitude of the buyers are overbidding. This is the distribution. The redder the color, the higher the buyers are overbidding, the whiter the color, and there is no white even in the expensive areas at 7% above their asking price. So how slow is, or how bad is the marketplace if you're getting 7% above your asking price? This is median price. I also follow the 10 and 90 percentile. Those the data are not on the slide though. So these are the three components, red being Santa Clara County. You can see all three of the components are going in the upward direction as we're starting to close 2022 transactions. This is the price, single family homes only. Colors assigned by the median price. The number to the left is the cheapest 10 percentile in an area, then the median, and then the highest 90 percentile priced home in the area. So you can pick what your price range is and find out what geographical areas you can look in. Here's appreciation using the 5 weeks, and I'm comparing it to the entire 2020 calendar year. So my base is every transaction that closed in 2020, and I'm comparing it to closings 5 weeks back from Friday night at midnight. The cells that are highlighted yellow are the record high for that particular micro market area. You can see that most of the yellow highlights are on the left side, which basically indicates an increasing price marketplace. There are a few notable exceptions, and they're not that far back. South County at 39% was way back at the end of January, but it's still now at 35%, not much of a change. And then you have the expensive areas in San Mateo County. It hit 39%. It's now down to 21%, but you can see there's a lot of fluctuation, 39% down to 10, back up to 21. And that's simply, you're looking at a smaller micro market area. You're looking at homes that are not homogeneous. They're not cookie cutter. And, it just all depends on what's happening versus market trend. That's why it's nice to look at the things. You can see what data is significant and what data is not significant. Now we're looking at a table. This goes back 20 years, but I have more, it's labeled March data. It is March data for every year except for 2021. What is March data? March data, it starts on March 1st and goes for the next 35 days. So it goes through April the 4th, including April the 4th, and I get the data on April the 5th. We're not at April the 5th yet, so I can't have the data. So for the current year, I go midnight on the 19th and I go back in time 35 days. So I'm including some period of time, maybe 14 days it would be 16 days in February, because April, March, I got 19 days in February, and then I needed 16 days in February. February is a 28-day month, so 16 days leaves behind the 12. So it's back to February the 13th if I'm doing it quickly as on the fly. So I think it's from February 13th through last night at midnight, March the 19th. So it's earlier in the year than normal. So what can we learn from this data? It's a little bit forward looking. Your current inventory is at 500, so that's a record low inventory, but inventory typically will go up over the next 3 weeks, 2.5 weeks. This number will go up. Will it get to 628? Actually, I'm not so sure it will. Will it get to 625? I don't know. So this year probably will set a record low inventory, would be my guess. Median days on the market, I don't think that's going to fluctuate too much. It would be increasing, but I don't think it's going to increase by 2 days unless the market really slows down. So this is probably going to be a record fast speed. Where you really pick up the speed more is DUI at 15. Now, last year it was only at 16. Will it slow down? Very easily. It could be slower than last year. It could be slower than 2018, but it's going to be in that level of magnitude. It won't be slower than 2020. It won't be slower than 2019 unless something happens real quickly, but it has to happen fairly quickly because there's only 12 days left in this month, and I need 4 days next month. So it's a little over 2 weeks. So in 2 weeks, really the most I'd expect DUI to go up is 10, and that would be if the market really shifted. So that would be up to 25. So I feel pretty comfortable. It's not the meet 19 or 20. It possibly could hit 17, but that would mean the brakes would have to hit pretty hard. But take take a look at, while we're talking about this, look at the data for 15 through 19. You had 24 days, 30 days, 25 days, 17 days, and 36 days. So those were my 5-year benchmarks. And now we're at 15. You're just not even in the same league. Number of sales will actually increase. So we're at 32 days, 32 sales a day, 1,100 over the 5-week period of time. We're already outperforming several years. Will we outperform 2021? We have to go up 200. We actually might do it because the weeks you're dropping off are going to have less transactions than the weeks that are being added in. It will be close, too close for me to indicate with this any strong confidence on which way it would go. Don't really expect shift in pressure on price overbid. And these are record high numbers. So these will probably be record high numbers in another 2 weeks. Pricing, these are record high numbers. I don't see any indication, and pricing is actually a lagging indicator. So for the next 2 weeks, that data is already in the pipeline, is already set. So I feel real comfortable saying the median price will be a record high. And then you get down here to the square footage and the bedroom counts. And I'm noticing the bathroom counts got dropped off. So I'll add that back in, not that it's significant. And then for those purists that want to compare apples and apples, you have to look in the rearview mirror because the most recent data that I have for 2022 is February data. So here's February data going back 20 years. It's the same data. No need to go into the details. With that, we get to the recap. These are the URLs that I went over. Appreciate people joining me Saturday mornings by using the tiny URL Silicon Valley Real Estate Market Graphs, just the 5 letters or 6 letters, and 2022, and then you can participate and ask questions. The handout for those that are familiar with it and just want the data. I try to get it up there Saturday morning before I go live. Sometimes my target is to try to get the video up by about 3 o'clock Saturday afternoon, but not uncommon for me not to be able to meet that deadline when I have obligations with clients. Anyway, with that, I'm pretty much finished. Does anyone have any questions? Not seeing any questions. Everyone have a nice week and see you next time. Take care. Bye for now.